presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
What's going on, folks? This is Jacob Shoup filling in for Tom O'Brien. We're going to be closing it out today. Well, how about the market, right? We are up right now, 1.21% in the SPY, the E-mini 1.12% as well. Russell Futures still up today as well, 1.32%. NQ's 1.29%. The composite up 1.4% as well. We're covering a little bit from yesterday. And then, of course, the big story is Dow above 40,000. So, quite a little fake out from yesterday, right? Where you had somewhat of a, substantial shake off or sell off, at least in the composite. You see these tech companies coming down. Let me just see. I don't even know what NVIDIA is at right now. Obviously, that came down a little bit. Yeah, we're up again right now. 3.35%. Tesla obviously gapped down. Didn't really gap down, but went down quite a bit yesterday. Tested that 220 level. Excuse me, the 240 level, and bounced right back off it. And we're up right now, 3.93% in Tesla. So insane. I was thinking of at least adding some TSLS, which is Directions Tesla Bear. Now, this is cool because it's a 1-to-1, so you don't got to worry about other things that come with 3 times leverage, 2 times leverage ETFs. But I'm glad I did not add that. Anyways, let's see what up. The dollar still down in that trading range of 104.09. Of course, the Qs are up as well. Now, Lucid, man. What can you say about that, right? This is a weird thing for me, right? And it's a weird thing for me, too, because I took a position in Rivian a few days ago, which has been treating me well. Of course, not, 24% in a single day after, you had days of 3 to 4% increase as well. The first time I ever saw Lucid was literally yesterday driving home from work. I've never seen one prior to that. I still think Lucid has a lot of problems with cash. I don't know how long they can stay going with the amount of cash that they do. That was a major concern with Rivian. But Rivian got, that big cash injection from VW. And people are tending to like the R1s. They obviously beat on earnings in a big way. And, But, anyways, if you were getting on that kind of meme roll, and that's, that's some good volume as well, So we'll see what happens, essentially Monday. It kind of makes sense, I would say, that the SPY didn't come down, so hard again today, on the last day of the week. So, we might have a interesting kind of time on Monday. I think in some way, you kind of anticipate a pullback a little bit. Economic data was fine. It was kind of good for the concept of bringing rates down in September. But I still think, Powell's a little bit hesitant on it. You still need a few more months to see on that. Anyways, we might just get a stall out at this level. It's hard to say at this point right now. I will also say as well, if you missed Tom's show yesterday, he had a really good interview with Tim Ord. Really recommend checking that out on our YouTube and kind of hear them both speak. I was listening to it the whole time, speaking about the market in general, all the way into gold and that kind of stuff. And, before we move any further, I have to say, I am the admin for a lot of the little events we have going on in the Tiger's Den. If you're not in the Tiger's Den, I strongly recommend getting in on it. You can just go to TFNN.com. I'm going to go ahead and pull this up here right now. You can go to services, and now this is just a massive trading room. Where is it? Right here. This is $1 a year, and we only do that just to make sure we know who's in there for security purposes, keep everyone safe, and just get a lot of trading and discussion going on. It is awesome. And when I get, a day like yesterday happens where you get some, volatility in the market, that's when I get excited. And I was just reading The Den the whole day, and it was awesome. If you're new to TFNN, strongly recommend checking that out. And however, this morning, we had the other installment of, this is the first for this month. We'll have another one on the fourth Friday of Live Trading Fridays with Larry Pesavento. That was phenomenal. And again, we had that volatility yesterday. It was fantastic. And, we've been doing this for a few months now. And Larry is just, he gets on and we just get going. And it is a great time. If you want to check that out or any other kind of service or newsletter that we have, strongly recommend checking this out. This is the TFNN July Tiger Dollar Sale. You get bonuses, 20%, 30%, 40% on all your Tiger Dollars. And that goes to all of your purchases. And they never expire. Come on, it's a sweet, sweet deal. All right, let's move back into the markets. You had some stuff going on with the banks today, and I want to pull up. They had earnings, of course, but I just want to pull up a little some of them, and we can go over it just a tad. If I can get my article. Obviously, let's look at Citibank just first, just to get a chart up for it. We're down pretty significantly. I mean, it's only 0.93%, but still, not everyone enjoyed it in such a way, right? So you had Wells Fargo. Okay, they kind of lost a little bit. Let's see what JPM is looking at as well. That is down. So you had Wells Fargo heading for the worst earnings day drop in more than 3 years. Crazy. Citigroup slumped as expenses were in focus, even though its markets revenue beat expectations. JP Morgan sank the most in a month after results and steady guidance failed to impress. Is rekindling part of the early decline. Yeah, I mean, this is what I really think it is, right? You have kind of the valuation of this high interest rate structure already priced in with the banks, right? And why go into that when I can buy Lucid for $4 on a share, and then we see a 23.83%? You have a lot of these stocks kind of just waking up in a weird way. That, for instinctually, is giving me somewhat of a pause for whatever reason. Just in the sense of why now? Does the market, can people not get into AI? Is this kind of the thing? And that makes me a little bit nervous in some capacity, right? Because now you're just saying, hey, we have so much capital still. Things like AMD, NVIDIA, everything's priced in. So what do we do next? Well, what is adjacent to AI or any kind of tech? And you're going to start looking at these EVs as well as a few other stocks. So I don't know, a little bit strange on that, but I kind of see that might be the major issue, at least going on with the banks as well. And then, of course, you have Tesla. We could talk about that a little bit just before the break. Up 4% again. Just an insane thing. I mean, this is a rug pull here. This is what I talk about when I say be careful if you're doing anything on Musk news, because this is how he gets money in a major way. He rides these up a few days and then rug pulls it out. I mean, this idea of an August showing for the robo-taxi, I don't even think was true. I'm not even sure if we're going to see it in October. And he spoke today about improvements for the FSD, but then didn't really speak about robo-taxi at all. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until July 22nd, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred and never expire. If you want to receive a 20, 30, or even a 40% bonus when purchasing Tiger Dollars, now's your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until July 22nd, so lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. We're talking a little bit about some potential mining stocks in the den. Again, get in the den. You need any help, you just email me at jacob@tfnn.com with all of that. We will get you set up, and I promise that you're going to love it, too. I'm looking at Hecla right now. This is something I've just been thinking about for myself. Silver has that potential, to really pop if we get the gold contract moving on it. Obviously comes behind, and today we're down 1.8%, right? But what is unique and I think somewhat of an interesting sign for Hecla is we're still up 2% right now, and it looks like it's going for that high of $6.29, and I still need to do my due diligence on this company in a major way. But one of the things that I have the privilege of looking at, working at TFNN, is the Gold Report newsletter by Tom O'Brien. Okay, now this goes over so many equities and so many miners in gold. It has a phenomenal synopsis of what's going on in the market in the beginning paragraphs. And of course, we do some trading as well every now and then. Again, strongly recommend checking this out. If it is your first time, 30-day money-back guarantee. I can't recommend it enough. And this is where I learn a lot about stuff with miners, because, being in my age group, I don't think about miners. As I'm older, or really even precious metals to begin with, but as I get older, I'm like, what? No, I think this is somewhat interesting, right? My grandfather obviously spoke to me about it a lot. But, having a little bit of your portfolio in metals and the miners is an interesting thing. So I really recommend checking that out. Hecla, again, has been doing quite well, up about 1.8% right now, even with the silver contract off about 1.83%. Now, another miner I want to talk about has nothing to do with precious miners, but it's Cameco Corp. Now, we're down a little bit today, but you had some moves up, and these guys are doing the uranium. And what is so cool about this, because I know we were speaking about it a little bit the other day, and I had a caller, and then Teddy Kekstat, which is always welcomed. But I wanted to talk a little bit more with this as well. And it seems like Biden just signed a new bill for boosting nuclear reactor deployment in the United States. And this is the thing, is what I've been trying to say, is that this is going to have to happen. For us to stay competitive in this new world, it's going to be with data centers and how we compute that data and make it work for us. And for that, we need a lot of energy. And solar isn't going to cut it. Wind isn't going to cut it. Geothermal does okay. But, let me see if I can pull up look here. This is energy.gov, right? just so I can like really sell this concept of nuclear being so imperative. This is from energy.gov, right? I think it's released, in 2021. This is what we're all focused on right now, this wind and the solar. A 24.9% efficiency rate for solar. Wind is 35.4%. And, they're massive, and then you take up a lot of areas. Coal does its thing. I think wind has now actually taken over coal as of this year. But, obviously because you have coal declining and wind increasing. Hydropower, et cetera. We're running natural gas a lot of ways. But nuclear, look at this, 92.5%. Okay, so you have this new bill that comes out, and I think Biden passed it. This is on energy.gov. So included in the bill is a bipartisan legislation known as the ADVANCE Act that will help the U.S. build new reactors at a clip, they say, that we haven't seen since the 70s. It builds on the successive previous legislation, a modernized approach to licensing new reactor technologies. And we have these things called small modular reactors. So instead of these massive kind of plants, I mean, those will still be there. But these SMRs will be really interesting because that's what these tech companies will be using, right? They're going to be able to build one or two, and that will be enough power, for these data centers. And this technology is so good, especially with natrium reactors, that you can really scale power in an efficient way. Trad reactors can still scale output, but they're not really designed to do that. And so you have Cameco Corp. Now they're down a little bit right now. These guys are major miners in the area. Then you had SMR, which I think took off today. This is New Scale Power Corp. Yeah, they're up 16.8%. I'm worried about the cash on these guys and, if they can make it through the year with it. Because I'm pretty sure they've not built a lot of stuff now, but what they're doing is this, as you can see from the ticker, the SMR, these small modular reactors, that's what I think a lot of these tech companies are going to get in on. And the market thinks that as well, up at 16.85% today. Yeah. Let's see if there's anything interesting else about the New Scale. I don't know. Again, this is a pretty big run. That's some pretty substantial volume. The future is definitely nuclear. But the question is, when you get to this point, right? When you're going up this kind of chain, when we were looking at Cameco, we're talking about getting this stuff out of the ground. And then when you talk about things, like New Scale, that's where you're like, okay, well, is their plant design going to be the one that takes over? How long until we actually see ground being broken on developing these plants? So these are all questions you kind of have to ask yourself if you want to add something like nuclear to your portfolio. Because you could run the risk with New Scale. I mean, say we don't start building for the next 5, 6, 7 years. I think it probably will be sooner than that just because the demand is so necessary. And the demand is really increasing pretty quickly as well. But the question is, can New Scale stay that long, right? Do they have the amount of cash to stay afloat that long? These are all things that you have to look at when you're trying to add some stuff into your portfolio on a long term and really pick the right companies. And of course, Basil talks about Quad U off a little bit today. But anyways, as far as outside of precious metal miners, Cameco is something interesting to look at. And the market thought too, this is like the day I was looking at it too. I was like, man, we were trading around like 48 something. Then we pop right up to 52.86. And they're really set. They're one of the largest uranium miners in the world, I think behind Kazakhstan, which is saying something for sure. Let's see what else. Energy fuels, yeah, UUU's down a little bit right now, but obviously you had a massive tank up as well. So it'll be interesting to see how that shakes out going forward in the future. All right, let's see here. We can take a look at, oh, you know what? This is kind of cool to talk about. One of the really popular things that you have now, like on Instagram or Twitter, or I guess X now, but it's these companies or these accounts that will track what Congress people invest in, right? So obviously Pelosi's fund is one of the biggest ones right now. And that in and of itself, is kind of like a funny conversation. Like, oh, okay, yeah, like Congress people investing in things, there might be a conflict of interest there in some capacity. So a few senators This is interesting. I'm just going to pull this over. A few senators are striking a bipartisan deal for a ban on stock trading by members of Congress. And I think one of the major issues you have now, and I'll even say it from people in my generation and younger, is there is a vast lack of trust in, not just Congress, but every branch of the government and, even regulatory. So this is a path forward to where you can start kind of building that trust back, I think. But you have to do this correctly, right? Obviously you don't want people coming into Congress to make money, but a lot of people have portfolios and they don't want to necessarily lose that. So the question is how do you do it when people already have these portfolios and they want to run? So it'll be interesting, and I think the future will hold the answer. Folks, stay tuned. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Let's see where we are at right now. Just up a little bit, 1% in the E-mini, 1% in the SPY, 1.26% in those Russell futures. NQs up about 1% as well. And the composite, 1.14. And man, that Dow Jones above 40,000. And we are joined by Tommy O'Brien. Tommy, how are you doing?
Good afternoon, Jacob. How we doing?
I am doing all right. What's going on with you?
I couldn't find my Dow 40,000 hat, unfortunately, but I think I'm going to have to get one, right? Quite a market, man.
We'll put it in the Tiger shop or something.
Yeah, right? Along with NASDAQ 100. I mean, we just got quite a relentless rally today on the heels of yesterday, but
Absolutely.
boy, that was quite a pullback, and time will tell whether that was potentially the start of maybe a little bit of volatility. I had a chart, if I can, to start things off, all right? I sent this out to my subscribers in the beginning of the week, and it's just interesting. I was talking to my dad about this earlier in terms of the remarkable rally that we have been in, man. And there are ABCDs all over this market, depending on the time frame that you go back. And this one is the biggest one of them all, man. It goes back to the lows of COVID. So I started with the NASDAQ 100 up here, okay? I have the NQs. Put this on a monthly to go all the way back to, it's remarkable. You got to go back. I mean, I can't believe, right, that COVID was more than 4 years ago.
I know.
Which is just bonkers in terms of how recent that actually feels. But the NASDAQ 100 dives down to 66.28. We drive higher to 16,767. You have quite the pullback as the Fed begins to raise rates, right?
Yep.
And we pull back to 10,044, and then we charge higher. Now, what's remarkable here is you have an A to B, C to D, man, that we just completed at 20,623, and we're trading right now at 20,620, within 3 points of that price level. Made it to 20,983. What's almost more remarkable is that A to B leg is 10,150 points essentially. And you have two of them within the span of about 4 years, and the whole index is only trading at 20,000. And you have two 10,000 point runs in the span of 4 years, and the index is trading at 20,000. You're trading up 100% from where you were about a year and a half ago. And, what's so cool is the pullback was almost exactly at the 618, man. The 618 pulled into about 10,501. I think the cherry pick low was 10,484 from October of 2022. Again, it's a monthly there. And I'm not a huge bear in this market, right? But it is something for context to keep in mind, man, because how high can you go so quickly, man? How many 10,000 point runs can you have in an index that was trading at 6,600? I mean, we came into COVID at, 8,600? Something like that. Yeah. So anyway, I found that pretty interesting. When you take a look at the S&Ps, you make that same comparison, and I think that takes you up, do I still have it? Yeah, I think it takes you up to above 6,000. Is where that would take you if you did the same. 6136 if you take a look at the same A to B, C to D. The A to B leg on that was 2,634 points. And what's so crazy here is the A to B leg is just mammoth when you look at what this index started at. You start at 2174, and it runs 2,600 points up to 4,800, and then the S&P pulls back 50%. And, maybe this could be, if it was, that the NASDAQ 100 is just a little bit ahead of itself, right? Maybe the S&Ps, we're seeing it in the Dow. We saw it yesterday in terms of what happened, right? Tech stocks get clobbered. Yep. Russell plowed higher. Dow making new highs. So it's interesting, man. But I wanted to share that one because I was doing that this weekend saying, my goodness, the NASDAQ 100 is literally completing a 10,000 point A to B, C to D leg, and we're literally at that point right now. And it was a nice 618 retracement. And boy, and what's so cool here is that there's ABCDs everywhere. So then you go to like a 3-year weekly, you could have an A to B, C to D that began at the beginning of 2023, potentially with a little pullback, and then you could have the shorter term one that began back in October of 23 when you had the NASDAQ at 14,100, and you had that pullback that we had for from March 25th until April 24th, a 1 month pullback. So quite a market, man, but just wanted to pull that up. Quite a market indeed. Maybe we're coming into election season, man. I was seeing articles. I had one pulled up. And this one was, I think, from the Journal. And, not talking about politics, man, but it just makes sense. Listen, Trump's got a huge lead, right? If you're in the betting markets, man, Trump's got a huge lead. So as a market participant, I believe him when he says he's coming with the tariffs. And listen, longer term, Tommy's 3 years old. Maybe China needs some more tariffs to make sure they're not undercutting American. But boy, that would not help inflation. What happens there with the market, when it's priced? I heard somebody use a term on Bloomberg, I think the other day, just market's fully priced. Not that it's like bonkers, but it's kind of fully priced right now. And where is a little bit of volatility about what may come down the line if we do get those types of tariffs and we have these companies trading at pretty stratospheric levels. So just something I'm looking at, something I'm thinking about, something I wanted to bring up.
Well, and I think you can see that, full pricing in a sense with all these kind of smaller caps, like popping up in these random companies, just kind of getting a lot of cash injection, especially today. What's going on with Lucid, there's not really a lot of news going on with it. It is popping up in a big way. And what I was saying earlier in the show, right? And, I think this is an issue with the NASDAQ in a sense as well, with all the tech companies, is the big drivers, which again are the techs, I think are kind of priced in this sense,
Yeah.
And they're trying to now jump back down, all right? What's peripheral to this? And it's going to keep going. And for some reason, that makes me feel a little bit nervous. I mean, at least say with something like Lucid popping up 23.97. I mean, that company has a lot of issues with it, right? Certainly.
I heard you talking about that at the beginning of the show. I was listening. Yeah.
It's interesting.
Hey, we were talking about some of these market analysts, right? You were talking about Kalanovic. How do you pronounce his name? Kalanovic.
Yeah, Kalanovic. Yeah.
So Kalanovic, thank you. And this one's interesting from Bloomberg out there, okay? And it's just talking about, history repeats, man. So all this stuff I find interesting. And what they do is they bring up, and it's a little bit before my time, as in I was around, my dad, had an investment firm, but I was still in college, so I wasn't quite clued into the degree that I am right now. I wasn't even working at that time, right? But boy, you had the dot-com bubble, and as they put it, in August 27th, on the date 1999, the finance world was rocked by the resignation of one of its most committed pessimists, Charles Clough. Merrill Lynch's chief investment strategist. Why? Because he was a bear during a relentless rally.
Yeah.
And he steps down right before 2000, man. And, the S&P was up 220% from the beginning of 1995. Well, that's remarkable because the NASDAQ 100 right now is up like 100% in a year and a half, man. And, you run it from the numbers that I just talked about, where, what was the low? 6,600, and we're at 20,600 right now in the NASDAQ 100. And you have any bears on Wall Street losing their rolls.
That's right.
And it's not the bubble. These companies, I love the equation. It's not pets.com. It's not.
Right.
But boy, there are some fully priced in valuations right now. Maybe you just get some chop for a while. Maybe get a 10% pullback. Anyway, yeah.
Awesome. Tommy, stay right there. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup. I am with Tommy O'Brien. Tommy, before we went to break, we were talking about the massive moves in the NASDAQ and the S&P in general. And just quickly before we move on, I want to look at Intel today as well. We're up 3.5% in Intel. And this was on the Greg Lavender, who's the chief technology officer, had a really good kind of rosy picture he painted, saying the company is on course for $1 billion in software sales through 2027. Now, there's been a lot of discussion what exactly he meant by that. Is, are they going to, have $1 billion through from now to 2027? A lot of people are looking at it as $1 billion within 2027, and that would be a 10 times growth since 2021. And this is one in the AI bump that hasn't really gotten a ton of love, right? We're still trading around 147 billion market cap. And I think some of the investors out here are kind of interested to see where this could potentially go, right? You're doing this hardware kind of creation now, or hardware acquisition, at least in the form of chips. And the next phase in this is how are we going to apply it? What infrastructure are we going to apply it on? And then, what are going to contain these kind of chips? I think, for instance, you have Qualcomm doing the Snapdragon. So that's going to be their new kind of AI computer chip, right? But I think Intel is going to be popping on that pretty quickly as well. So anyways, I just want to throw that out there because we're up 3.39% again today. So.
Yeah, I had the chart up there. It's a great point, man. That's one thing I try and wrap my head around. It's like, NVIDIA, the whole world wants their chips, right?
Right.
And that company's worth $3 trillion right now. And what's remarkable is, when are they going to get some real competition? Because, and I don't understand the fundamentals of the company well enough, but it is something intriguing when you look at that. No matter how much money it takes to dig into, be able to make something like that, and it's hundreds of billions, if not trillions, literally. It seems like competition should be coming when that is what the world is going to feast on for some time, and they're the only game in town right now, and they're valued at $3.2 trillion. And what's remarkable is that if somebody comes up with that, they can compete. It's a different business than usual. You know what I mean? As in, you can't say, yes, okay, if somebody comes up with Amazon, they can compete with Amazon, because you have to convert all your customers and so forth. And I know I'm generalizing it to an extreme degree, but it is interesting that if any company can make chips, and there's plenty of companies that have the ability to do it in terms of the big tech companies, and then even the Intels, the AMDs, and so forth. Right. They can compete. And so it's just intriguing that, and NVIDIA is by far the only game in town right now, and they're being rewarded rightfully so. But geez, when you're the most, the largest market cap in the whole world, and you're just producing chips, and I don't say that lightly because it's not just chips, they've built it over decades, but it is intriguing to, that Apple's going to be coming for that, that Intel, as you say, is going to be coming for it. There's no reason why, when there's enough of a reward at the end of that tunnel, that you dig into that with enough capital expenditure, and maybe that you can actually begin to compete. Hey, and NVIDIA is going to try and stay ahead of that. I get that one too, and they're going to be around. They're not going anywhere for sure. But are they going to be the only game in town? Probably not, man. Just because there's so much of a reward out there, and we'll see. Yeah.
And not only is it just the reward, it's Intel is also getting that great capital infusion from really the U.S. government, right?
Yeah.
And the CHIPS Act. So we have Gaudi 3 coming out, which is going to be their new, basically large language model training chip. That's going to compete with Blackwell. And what I was saying the other day talking about this, if Intel can roll this out, and it doesn't even necessarily have to do better than Blackwell. It has to be a near competitor and just be a bit less expensive. And I really think Intel could be a launching point for them in the future to be able to truly compete with the tech that NVIDIA is putting out. So interesting
That's a great
stuff
point,
for it.
because I find myself thinking the same thing in terms of how can they hold on to this monopolistic nature that they seem to have right now when they're making chips, and if somebody else makes chips that can compete, then the buyers will find them. It's not something where we're just used to shopping on Amazon. It's very difficult. It's not something where Walmart has the infrastructure built out that who can build all the stores, within 5 minutes of everybody. If a company out there builds the chips, they'll compete. It's that simple, Yeah.
Absolutely. I was just looking at some of the SRAM for Gaudi. This is all tech stuff, but we're talking like 12.8 terabytes per second, which is nuts. Anyways, that's I'm going to nerd out if I keep looking at that. That's just insane think about this. Like, even when I was very young, like 5 years old, 2001, the internet and tech was not like this, and just the quantum leaps we've made so far. Think about, when I'm in my 60s, what this is going to be like,
I don't know if you saw, and I just Googled this. We're just talking. I started to see. The Sphere in Las Vegas, right? I have not been to it, and man, I got to go to one of these shows because I see all these visuals, man, and talk about the new generation of entertainment. But the news is out there today that recently, I think, because this one's only, I started seeing this recently, that it is powered by 150 NVIDIA GPUs. That thing is powered, pushing 28 million watts is what it's pushing out there, and it's got 150 of its RTX A6000 desktop workstation GPUs is what's powering that thing. I know, right? But boy, I don't know if that thing's even making money in terms of how much they had to put into it, but boy, I got to see a show because those visuals out there are pretty amazing. Yeah.
Absolutely.
Hey, how about Bitcoin? What do you think of Bitcoin, man? I got an article up here that Bitcoin ETFs see the best weekly inflows since May after a price swoon. So they took in, it's remarkable, these numbers, man. This one's from Bloomberg, and I think it's dated today. Is it? Dated today, this afternoon. 882 million. You're talking about $1 billion a week now. It's just the standard number that we're talking about inflows to Bitcoin ETFs. There's only a limited number of them, 19 million, 20 million, whatever that float is. And between BlackRock, Bitcoin funds of BlackRock and Fidelity led the surge, taking in 403 million and 361 million respectively. Grayscale out there, they're bleeding cash because their structure is just the fees are so high. They lost 87, but 882 million in a week. So Bitcoin's not dead just yet, even though it pulled back from 70,000 and change to 55.
Right. I think it still has the potential to go a little bit lower, especially with Mt. Gox and a lot of the just outflows in actual Bitcoin itself, right?
Yeah.
But what I think some people are seeing with it, and this is something that I've had to try to, impose on myself as well, even with Tesla, right? Tesla always does this thing where it comes down so low and the company is in smithereens, and somehow Musk is just able to pull it right back out, and Bitcoin has done the same exact thing so many times. Now, I'm not saying that goes on for eternity or anything like that, right? But it's the same thing I've had with Bitcoin every time. Oh, okay, we're coming down. Even a few years ago, you're bottoming at a very low level, and I'm like, this doesn't get back anywhere close. And it's done that 3 times, and I don't know. I still think it has some to do, right? So the German state, they're confiscating Bitcoin from Mt. Gox, which is basically just doing, deals online illegally. and they're trading that out for actual cash to reimburse some of the victims. So I think that's...
Hey, we're going to have to take a look at this S&P, man. I'm not sure what happened at 3:30 when I came on the air, but we just dropped almost 40 points from where we were trading at 3:30. We got volume in these markets. Let's take a look when we get back.
Absolutely. Man. Folks, stay right there. We'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup. I am joined by Tommy O'Brien. And yeah, Tommy, looks like we dropped somewhat significantly the E-mini. About like 40 points or something. A little less than that right now, I guess.
And if you look at, man, there was some volume. So
big time volume on that.
That was quite a volume spike. What do we have? 119,000 contracts traded at 3:30 and a 15-minute bar. For some context, you had 27,000, 26,000, 23, and boom, they come in, they blast it for 120,000, and then 92,000. So that's, in the next. Yeah, in the 45 bar, which takes us through the end already. So huge volume coming into the end of the day. And hey, how about the banks? Let's look at the banks, right? Because we got bank earnings, man. And boy, you talk about it. I was pulling up the article here from the Journal. Big banks and customers continue to.
Tommy, you there?
Sorry, yes. I think I had some audio. I think it's just probably playing in some URL screen I have up.
Heard.
That's okay. Big banks and customers continue to feel the pressure from high rates. Yeah, sorry, I had some audio playing somehow. But nonetheless, their Citi down 1.5%, and Wells Fargo, really, what are they down? Yeah, 6% for Wells Fargo on theirs, and JP Morgan even down 1.2%. They talk about credit card write-offs kind of normalizing to a higher level in here. But boy, it's going to be interesting. 1 or 2 cuts is not a big deal, as in, we're still going to be at a level. But, Diamond's been warning out there that we may stay a little bit higher for longer. And I'll pull that one over here too. And that's, JP Morgan's Diamond warns inflation and interest rates may stay higher. So the next conversation, I think we probably got a cut coming in September unless we get some shocking data with what's come out of the line so far. But 1 cut, 2 cuts, maybe the Fed gets into a 4.75 range, something like that.
But does it go lower than that, right? Is there this concept in the market that we might go back to like near zero again? I think, it's not going to be that. And I maybe
if
not a lot
of... If we go back to that, I think we're in big trouble, and they're going to do that out of a dire need, and that would spell huge trouble for the markets. That's not going to be out of like, let's get back to some hunky-dory times of, you know what I mean? Yes, there's always the potential. But if that happens, that means that the economy is severely weakened, and they need to stimulate it, and that's not happening right now. That's
agreed. I think we're going to settle around, something like maybe like 4.5, 4.75.
Yeah,
so
these come on, I mean, the margins of these companies, right? I mean, the margins of these companies, man, got to remember the margin they're dealing with. That's not a big price of capital.
Tommy,
Jacob,
thank you
so much, man. Appreciate it.
Absolutely. See you there, guys.